Realty today. The stock has cracked over 5%, and this is on top of the crack that we saw yesterday as well. And Q3 overall seemed to be quite strong, right, Anushi?
Right, Harsh. So if you look at the Q3 overall in terms of where the financial metrics were and even the key operational metrics, so we looked at a healthy set of numbers. In fact, if you look at the booking value, that's about so strong Q3. This is with the positive commentary. Do note that we had discussed that commentary on how the pre-sales trajectory is going to be something that we should be watching out for. In terms of where the booking value is concerned, we saw about a 144% of a growth there. Collections also saw about a 56% of an uptick, and revenue recognized about a 31% of a growth. But despite the healthy set of numbers, they have missed their pre-sales estimates. This is despite the 144% of growth. So this is our bear case scenario, which the first point over here. This is because of the softer bookings that have taken place in 360 West, the Worli project which is there, due to which the brokerages have also revised their pre-sales targets in a downward motion. So that is something we should be watching out for. Now coming to the next case, and what should be watching out for is the company has a strong launch pipeline and business development on the bull side. Now, if you are just talking about what is the kind of launch pipeline that we should be watching out for, in Borivali they have 1 tower, Goregaon 2 towers, and Thane they are planning to build a whole ecosystem there. Shopping Mall, Forest Wheel, that is in focus. Other than that, these all launches are expected to be coming through in Q4 of FY25 or even the early part of FY26. So it's something we should be focusing on. Even the Gurugram, Adarsh Nagar, Worli and Tardev projects are something that is going to be beneficial. So a lot of upcoming launches in FY26, which is on the healthier business development side. But lower bookings from existing projects is a question mark. Now this was addressed in the con call as well yesterday. So what has taken place is that this lower bookings that we are looking is on the back of the higher prices that have taken place. The company has taken price hikes of up to 20%. This is in a scenario wherein there are talks of price realizations now stabilizing, but the management remains very confident that they are not seeing any adverse effect despite the price realizations, price increases taking place in the market. Now coming to the third point is the annuity portfolio is scaling up considerably well. Now if you look at the Commerce 1, Commerce 2, they are almost leased out to their highest levels. We are looking at 90% plus of leasing activity here. This is on the back of higher occupancies also taking place. Commerce 3 also, by the end of this financial year, they are expected to reach the levels of where the Commerce 1 and Commerce 3 is concerned. So that is something that we have to bear in mind. So expectation is that it will be fully leased out by the end of FY25 period. But on the bear case scenario, if we talked about a strong launch pipeline and the business development side, but if there is any delay in launches, this may impact the revenue recognition and the cash flows of the company. So while the management did state that in the next 12 months or so, or before that also, they'll say a lot of these projects coming back into action. If that does not translate in a similar manner, then the cash flow and the revenue recognition targets have to be revised and reworked again. So this is something that we need to bear in mind. But coming to the final point is now in the bull case scenario, fundraise proceeds. Now do note that the company had raised about 1,500 crores through NCD. Their total target is of about 6,000 crores. This they want to acquire. This they want to use towards acquiring larger land parcels. So this will also add into the business development side. So a very, very healthy factor that we are looking in terms of showing the kind of demand momentum that is still there for the business. So that is on the positive side. But however, if you look at the bear case scenario, considering the Q3 numbers, the slowdown in what the velocity of ongoing projects is and the pre-sale estimates which have been missed this quarter, some of the key brokerages have now revised their targets downwards. Some of these include Jefferies. Now they have maintained a hold, but they've cut their target price to 2030 from 2050, which implies a 10% of an upside. While Antique has also maintained a buy call, but they've revised the target price to 2,593 instead of 2,826. So this is with a 38% of an upside. Despite that, we are looking at a 38% of an upside. And Citi, though it maintains a neutral rating now, it sees that the valuation from this valuations remain on the premium side, so they look at limited upside from the current ongoing levels which are there. So this is the overall roundup that we are seeing for Oberoi Realty. This downtick in the stock price that we are looking at is majorly because of softer sales that have taken place in their 360 West Worli project.
Well, thank you so much for that, Anushi. Pretty comprehensive bull versus bear case on Oberoi Realty. Kush, quickly, Oberoi Realty, how much more of a downside are you seeing on the charts?
But with the kind of volume-led downside for the second consecutive day, I think there's a possibility that stock could hit the medium-term support zone of 1700, 1710. So no adventurous trades recommended just yet. Let's see if the stock does indeed hit and respect the 1700 mark.